According to a report published by CNBC on August 8th of this year, Japanese giant SoftBank has dumped its entire stake in Uber as losses mount at its investment unit. SoftBank said that it sold its Uber holdings at some point between April and July at an average price of $41.47 per share. SoftBank invested in Uber in 2018 and last year sold about a third of its stake in the ride-hailing firm, CNBC reported. It has now offloaded whatever shares it still held. The move comes after SoftBank's Vision Fund, its technology investment vehicle, reported a 2.93 trillion Japanese yen or $21.68 billion loss for the June quarter, one of its highest on record. Here, it's important to note that SoftBank was ranked in the 2017 Forbes Global 2000 list as the 36th largest public company in the world and the second largest publicly traded company in Japan after Toyota. Hi guys, welcome back to Glory Investing Show, and in today's video we'll be talking about the rise and crash of SoftBank. The rise of SoftBank Group Corp. SoftBank Group Corp is a Japanese-based multinational conglomerate holding company located in Minato, Tokyo, and focuses on investment management. The SoftBank Group Corp invests in companies operating in the technology, energy, and financial sectors. Vision Fund, the world's largest technology-focused venture capital fund, is also being run by SoftBank Group Corp, with over $100 billion in capital. To send off a full-scale internet business in Japan, SoftBank Corp laid out Yahoo Japan Corporation through a joint venture with Yahoo Incorporated in the US. In the wake of taking a stake in it in November of 1995, Masayoshi Son, the CEO of the SoftBank Group Corp, studied at the University of California, Berkeley in the US and engaged himself in different businesses and inventions at that time. After some time, he decided to go back to Japan and start a business of his own. Then he started a company which is now known as the SoftBank Group Corp, a software bank that would serve as the infrastructure of the new information society to be built in Japan. SoftBank brought new services to Japan from the US as a part of it. SoftBank Holdings Incorporated was established in the US to identify investment opportunities in promising internet-related companies. SoftBank Corp enrolled with the Japan Securities Dealers Association and started offering shares publicly on the over-the-counter market. Utilizing the 20 billion yen raised from this contribution, SoftBank started thinking about a huge scope procurement. Through SoftBank Holdings Incorporated, obtained the occasions division of Ziff Communications Company, took a capital stake in the presentation branch of the Interface Group, which operated Comdex, the world's biggest PC expo, and procured Ziff Davis Publishing Company, a distributor of PC Week. Following the launch of OTC trading in July of 1994, SoftBank Corp acquired a computer trade show operator and a publisher in the US. The SoftBank Group he founded in 1981 now ranks among Japan's 5 most valuable listed companies, owning stakes in many market-leading tech firms. His tremendous Vision Fund is currently wagering billions on the AI transformation, the asset that has put resources into 164 tech organizations, stuffing large numbers of them with undeniably more capital than most customary investment firms could at any point do. In the past 4 years, SoftBank has emptied $84 billion or so into new companies. It was the world's greatest tech financial backer even prior to supplementing a $98.6 billion vehicle it runs, the Vision Fund, with kin that presently contains $30 billion. The 224 tech firms it has upheld range from beginning phases to new companies to laid-out Goliaths like ByteDance, owner of TikTok, Gen Z TimeSync. Names like Plenty, Better, and Forward infer missions to change enterprises like food, well-being, and banking. Going by the valuations utilized by SoftBank and other investment funds, the supported organizations are on the whole worth a giant $1.1 trillion as per PitchBook, an information supplier. 1996 was a wonderful year for SoftBank as the organization moved to send off a rising number of a few internet-related organizations and auxiliaries. In the year 2000, the two organizations' current Alibaba Group Holding Limited and SoftBank Group Corp. Created a cozy relationship through business organizations, joint endeavors, joint speculations, and different coordinated efforts. Meaning to give less expensive and quicker admittance to the internet in Japan, SoftBank sent off Yahoo BB a complete broadband business administration utilizing ADSL in September of 2001. The service was generally acknowledged with the name Yahoo BB, offering 2 times the speed and about 50% of the value of contenders' contributions. Trusting in the appearance of the portable internet age, SoftBank expected to construct a versatile correspondence business without any preparation. However, it had the chance to secure Vodafone KK's shares and entered versatile interchanges, which it rebranded as SoftBank Mobile Corp in October of 2006. SoftBank Mobile Corp extended its client base through reasonable and progressive portable plans, further reinforced networks, and a wide assortment of gadget decisions. As the selector supplier of iPhone 3G in Japan, the organization delivered the gadget on July 11, 2008. Individuals lined before SoftBank shops all through Japan. The obtaining of a US-based organization, Sprint, as an auxiliary was finished, and the SoftBank Group turned into a telecommunications operator with one of the biggest client bases in the US, furthermore, Japan. Crash of SoftBank Group Corp. SoftBank Group Corp is selling part of its 9% stake in SoFi Technologies Incorporated. SoftBank sold around 5.4 million SoFi shares at a weighted typical cost of $7.99 on August 5th, as per Monday filing with the U.S. Securities and Exchange Commission. It sold an extra 6.7 million offers at a typical cost of $8.17. On Monday, an auxiliary of SoftBank claimed 83.2 million portions of SoFi as of June 30th, as per the filing. SoftBank still owns 83.2 million shares of the online banking services company, but it's unclear whether it will continue to divest itself of more shares. SoftBank revealed its greatest ever quarterly loss on Monday of 3.1 trillion yen, or $23 billion. SoftBank also reported a $6.1 billion foreign exchange loss because of the weaker yen. SoftBank still owns 83.2 million shares of the online banking services company, but it's not clear whether it will go on forward to divest itself of more shares. The Vision Fund has been hammered by a sell-off in global technology stocks this year. This loss is the biggest loss ever faced by Soft Group Corp's history. Shares of SoFi, which has declined half this year, dropped 3.5% and expanded trading on the news. To raise cash, the SoftBank has exited companies, including Uber Technologies and home selling platform Open Door Technologies, for a total gain of $5.6 billion. SoftBank CEO Masayoshi Son has experienced a progression of high-profile inversions after big bets by the first Vision Fund in late-stage new businesses. For example, office-sharing organization WeWork Incorporated soured, provoking him to fix venture controls with the subsequent asset. SoftBank's Vision Fund, the world's biggest technology venture vehicle, puts huge stakes in many unlisted innovation new businesses. Be that as it may, the low valuation is subverting SoftBank's capacity to change over open postings of portfolio organizations into liquidity to fuel much greater wagers. Properties that declined in esteem in the Vision Fund included Coop Gang Incorporated, SenseTime Group Limited, and DoorDash Incorporated. The firm has seen the value of its investments decline drastically. During Q1, the investment company reported a record loss of $23.4 billion. As a result, founder and CEO Masayoshi Son is taking a defensive stance and scaling back on any company operations. Sadly for SoFi investors, there could be many more agonies ahead as specific elements past the organization's degree are set to influence its business prospects fundamentally until the end of the year. The company is also dealing with several exits from its board, starting with the immediate departure of Clay Wilkes. Other directors leaving the company include Carlos Medeiros and Michael Combs. Both of SoftBank Group will be relinquishing their board positions at the next shareholder meeting. However, it's unclear if SoftBank will be replacing the two directors as leading shareholders. The SoftBank Group is in a huge loss as being the highest shareholder of SoFi Incorporated right now. The group needs to create some defensive and good strategies to overcome and survive this crash they're facing. It will take time and will make a strong comeback as the group had good relations with well-known companies recognized around the world. The journey would be hard but won't stay for long if they go with a plan. That's all for today's video. I hope you enjoyed, and if you found this video helpful, make sure you smash the like button and share it with your friends. Don't forget to share your thoughts with us in the comments section below. And while you're here, click to watch one of the other 2 videos appearing on your screen right now. I'll see you there. Take care and stay tuned.